later. I am hitting record on this meeting now. Oh, you travel. Well, I hope you had a great time. Welcome back. I've hit record. We're going to be discussing today the putting together the market maker strategy. We looked at this in the last lesson. We had some real accurate signals. In fact, looking at our signals chat, if you look at some of the signals that we took that I sent to last week, obviously you don't win every single one, but I think we won quite a lot of them. So if we look at, for example, let's see, GBP USD, last week I said prices would rise. We've had our rise and it's still rising. This is the area that I'm looking to take profit at. But since last week, when did I say we get in? I said we get in from down here last week. That was our Fibonacci level. And since last week, we've done so far 162 pips. Not bad for 1 week's work. So you imagine if you got in when it was cold, just to show you that these things are, we're not just spouting theory, these things are real. USD Swiss is going to take a long time to turn around. It's a long swing trade, but I still think it's going to give us another drop before it rises, which is why I haven't given the entry for that. Which was the other one, USD JPY. I think that also played out. That was a long signal, and it's still long today. We caught on USD JPY since last week. It rose 165 pips, and that's when I said stop to even look to get out of positions. It's come back down again to our original demand zone before taking off. But these are examples of some of the trades that I was looking at today. I don't like trading on Monday because it's the day that brokers like to decide their spreads. But these were some scalps that were taken. Got 21 pips here for a 10 pip stop loss, so 2-to-1 there. Euro USD was a really sweet trade today. The entry was right here on the pullback to my zone. Gave a nice 40 pips. Hello, Sandy. Gave a nice 42 pips for only a 7 pip stop loss. But we had quite a few nice ones today. USD CAD was another nice one straight out of my zone. Gave 47 pips for a 30 pip stop. My personal favorite had to be this one today, AUD USD. It was a 78.6 C to D retracement. If you guys remember my ABCD rules, here was the retracement. That was the C to D. And that was a perfect trade. Stops beneath 86%. I gave 24 pips stop loss to get a 131 pip gain. So you can see this is a high probability setup. NZD USD paid out 26 pips for a 10 pip stop. Gold I didn't get into. It was, the target was way too low. I think gold is going to go south tomorrow. But let's reanalyze. You're gonna get to know how I analyze. I'm going to reiterate some things that we looked at over previous weeks. Let me get a screen sketch up on here as well. But this really is what we're teaching you is how to trade like a market maker instead of trading like a retail trader, you know, with all the cute trend lines and support and resistance zones that most traders place, and then they end up losing a lot of their trades. Also want to teach you, you know, trading is not something you do every single day. You've got to find high probability setups. I've seen people have great techniques and they lose all their money simply because they don't know when to trade. When is the appropriate time to trade? When should I be out of the markets? You really should not be spending more than an hour trading in a day. If you're spending all day trading, you're blowing your account. You should have your setups ready, know when to enter and when to exit. Hello, Stefan. So last week I told you market makers think different from us. A lot of people believe that the Forex market isn't manipulated. It's heavily manipulated. And if you've been in this game long enough, you'll realize that you can have the most perfect technique, but it just feels like somebody knows where all your stop losses are, and they keep on taking your stop losses out. No matter how hard you try to trade, you enter in, it looks like when you back tested your trading, it worked, and then you got into the trade. I don't know if you've ever felt like this, like there's a hidden camera just waiting for you to enter into a position just to take you out the moment you enter the position. Is because market makers know exactly how we think about the market. Now they know on a weekly basis, on a monthly basis, weekly basis, yearly basis, daily or hourly basis, they know what direction that the market is going to go in. They've already decided the direction of the market. This is what I mean by manipulated. The market is predetermined. Please don't believe everything you see on the news. All the news helps us do is achieve our targets quicker. That's all it helps the market maker do, achieve the targets quicker. Forex market, yes, it is, I think now $5 trillion or $6 trillion a day. It's growing by the day, but it's not so, you know, don't believe that it's so small that it can't be manipulated. If the market, say for example, market makers wanted to drive the market up that day, there are various different exchanges. There's the New York Stock Exchange, there's the London Stock Exchange, there's the Tokyo Stock Exchange. Each one of these managers we call market makers. Each one of these work together, and their job is to take your hard-earned cash. That is their number one job, and I'm going to show you evidence of manipulation in the markets as we go along. But what they will do is you'll have what's called the Tokyo range, which is going to happen very soon. In about the next hour or so, we're going to have the Tokyo range. But Tokyo range is typically called accumulation phase. Wow, that pen is way too big. Tokyo range is typically, sorry about my not so straight line, but the Tokyo range is typically the accumulation phase. In fact, anytime you see the market from now on and it's range bound, whether the range is a triangle, you know, a support triangle, resistance triangle, whatever we think it is, when you see ranges, do not say what retail traders say from now on. A lot of retail traders will tell you that a market in a range is a sign of indecision. They will tell you that, you know, buyers and sellers are equalizing, so price is consolidating into a range. That's absolute nonsense. This is what market makers use. Market makers call this phase accumulation. Now, I'm not going to spell the whole word because I'm drawing it with my mouse. Market makers call this accumulation. This is where they are accumulating orders. Whenever you see the market range bound, there's an accumulation of orders. Okay? Is everyone with me so far? I'm going to explain it a bit better, but you all are out there listening to me. Is everyone understanding so far? Just type Y. Good. One person gets it. No? Okay, good. So this phase here is called accumulation. This is where market makers will accumulate orders. They will say, hey, we intend to drive the market up. Let's say they got 5,000 lots. Now, by the way, they're going to be trading with much larger lot sizes. They're going to be trading trillions. We only trade maybe on our best day, you know, with our size accounts, 200,000, you know, but they're talking about trillions of dollars of movement they're accounting for on the market. But I'm bringing it down to small numbers so we can understand it. Let's say they want to go long on the market out of the Tokyo range, out of the accumulation phase. They want the market to go up. What do they need before they can take the market up? Somebody who's been listening, I want to hear you. What do they need before they can drive price up? They got 5K. They want to drive price up. 5K worth of lots. And they want to drive price up. Somebody tell me, what do they need? Anybody, just type it. Just type it. Okay, sure. Okay, if you don't know, just type I don't know, so I know that you just trade stops. What do you mean by that, Shane? What do you mean by trade stops? Those are just two words. You need to explain them. So you got 5K on the table. What do I need? If say you and me are going to bet against each other, and I bet you 5K, I slap down 5K on the table. What do I need you to put on the table in order for this to be a fair bet? Thank you. They need a matching bet. They need to know. Now, they don't want just a matching bet. They want some chance to make some profit also. Thank you. 5K plus. They want beyond break even. So what are they going to do? If they've decided that the market is going to go up, after accumulation, what do they need to do? What do they need to do to make sure that you match their bet in the opposite direction? So they're going long. They need at least 6K shorts, 5K plus shorts. What are they going to do to ensure that they get the 5K shorts, 5K plus shorts? By the way, shorts means selling if you don't know. What are they going to do? If they know you're going to go long, they're going to buy, and they need 5K plus to go short. What are they going to do after accumulation? No, they're not going to drive the market long. They know they want the market to go long, so guess what they're going to do? To entice, the next phase after accumulation is enticement. They are going to entice shorts. Exactly. They're going to make you think. It may validate some long orders, confuse long orders by driving the market down. So emotional traders will be swindled out of their long positions. They'll take the stop losses of anybody who they validated long. Then they'll drive the market down. By the way, market makers call this movement in the market, they call it a Judas swing. Now, by the way, you may be wondering how we know this. We know this from people who actually work in the banking industry. Okay? This is not common knowledge. You won't find this on babypips.com, I promise you. But this is called a Judas swing. This first it's accumulation, then it's enticement. They'll entice you. They'll validate things for you. They'll make you see a symmetrical triangle that you read in some textbook is meant to break one way. They'll break it one way, then wipe your stops out the other way. They'll every single way possible. So after this Tokyo range, we'll get a Judas swing. Then we get the open of the UK session. Around the open of the UK session, be vigilant to your charts, okay, if you're an intraday trader. Now, by the way, this works intra-week. It doesn't just work intraday. But I want you to try and master this intraday. Even if you can't be at your charts, set some pending orders at levels that you know the market's supposed to go to. Now, around 7 a.m. UK time, we're going to get the London session. At this moment in the London session, the price is going to make most of its moves in the UK session. Because why? Someone might say, well, the UK people are awake. No, this is when the market maker is going to pump liquidity into the market. There'll be a fast Judas swing in the other direction. There'll be some kind of fast deviation. Then you'll see something happen in the UK session. You will see what looks like a W formation or an M formation. Now, if you go back to my patterns lesson, then you'll understand what I mean by W's and M's, otherwise known as double bottoms or double tops. Or you'll see a V formation, or formation. Either one of these will do. But you'll see some kind of double bottom movement. The market will bottom out. So it will validate shorts. It will make a push down, move up, validating people to go long. Then it will come down again, confusing traders again that the market may not be going long, it may be going short. If this scenario presents itself, Then what we look for is to go long on the market for the UK session. Usually once I was going to call them the Yanks, but they may not appreciate it because we got some Americans in our group. But once the US session opens up, you'll typically see the market drive the other way. There'll be some kind of correction. Okay, so we get accumulation. We then get enticement, right? We then get deviation, a move away from the Judas swing. And then finally we get some kind of correction. Okay? This happens usually on a daily basis. Do not trade every chart you see. Trade the charts where you see this pattern show up. Okay? So because there are some days where market makers will wake up to confuse people. They will drive the market everywhere. They'll make sure the market stays range bound for a day just to make sure you enter a trade and you say, oh, this technique doesn't work, and then you sulk and you're upset and you never trade again for another week. And then you look back at all the trades you've missed because you were having a bad day. Market makers know traders are emotional. Now let's look at this on the charts. Here is, I put my period separators on, by the way. Okay. I put my period separators on just so you can see some days. This is from here to here is a day, from here to here is a day, from here to here is a day. I'm interested in this particular day here. I like this day. Let's look at it. The market went into its Tokyo range. Okay, if we look at the previous day, if we look at this previous day, they ended the day. Now this particular day was sort of range bound, not very good for trading. Okay, so not very good for trading. What happened? Market makers the previous day, they validated shorts. What do we mean by validating shorts? We mean that what we saw was a short setup. The market was making lower highs and lower lows, right? So anybody who got in last night on this particular GBP AUD, typically they would have placed their stop losses above the high. Either one of these highs would have been where their stop losses were placed. The market Tokyo ranges for the night. Then what does it do? It starts to go against traders. Market starts to make what looks like a push up, but look how it doesn't take out the previous high. So the short sellers are still holding on. Then it double bottoms. It forms a W formation. Do you see that right there? There's your trade entry. This is how you're not going to be tricked out. Here's your trade entry. Here are all the stops from the previous days they're going to wipe out. Look at that. 2 days of straight rising. Do you see that? Now, by the way, some of the Judas swings won't be so large. Here again is another Tokyo range. Sideways movement in the market. Okay? What was validated from the week before? Long positions. People were buying from the day before. What happens on this particular day? Market makes a little push up, but it drops all the way down. Takes out. So we see this behavior on a regular basis. By the way, I'm showing you a macro view. I'm not yet showing you a strategy. I'm teaching you a philosophy. I'm teaching you how to think concerning the markets first before I teach you the strategy. So please don't worry about how this applies. Just the best way to observe this is on a 15-minute chart. You'll be able to see Judas swings and Tokyo range is much better. But if we look at, for example, this particular chart here, we see that all day long on this particular day, shorts were being validated. So let me change the color of that. Shorts were being validated. Then we see the market go sideways for Tokyo. Okay? What do? Judas swing south. We sell. Okay? So that's a Judas swing south. Let me delete that. Judas swing south. W formation. Do you see it? At the bottom. Here's your entry. All the way up to here, you got profit. US, the Yanks wake up, US session, and what do? They reverse the order for the day. Now we'll say, oh, head and shoulders pattern, yay, and whatever, but that's really, it's just market manipulation. Then what happens? We resume the Tokyo range. But what did they do the day before? Validated the shorts. You were still holding your short positions. They resume the Tokyo range, take out all your stop losses that were resting. This is the phenomenon of people always believing they're losing or somebody's watching their trades. These guys are very smart. Here's another Tokyo range. Judah swing south. We don't get a W formation. We get a V instead. Market takes off in the north direction. Now, again, here was our Tokyo range. Look what the market makers did on this day. Tokyo range. Most people will be trading the range breakout. Here was the range breakout. What did they do? Wiped out all the stops from the range breakout traders. UK session opens up. We get a V formation UK session. Market makes its true move, intraday swing. We get US session open. Market makes a reversal. Done for the day. You see that? This happens almost every single day on every major pair. In fact, it could even happen on stocks as well. Here again, you get a nice Tokyo range. What happens here? It looks like we broke the top of the Tokyo range to buy up. Market decides instead we're going to wipe out all the stops off the table, go down. US session opens. We get a nice reversal back into the Tokyo range. So to me, the most profitable time of trading is the British session, UK session. Yeah. Does everyone understand the philosophy so far? Or does someone want me to explain it a bit better, a bit more? Or are there any questions at all? No one's answering. Does anyone understand it so far? And he's like, yeah, someone wants me to explain it just a bit more. Let's open up another pair, if my computer will allow me. Let's look at any pair. AUDNZD. I hope, by the way, that my indicators aren't confusing here. But any pair, 15-minute time frame. Again, we get a Tokyo range here. See this? Tokyo range. What did we validate the day before? Long positions. They were buying. Market drops down into Tokyo. Have you ever noticed that you could, if you're a swing trader, you could be really high in profit, but by the end of the day, you're right back down again. It's because market makers want to make sure they bring themselves back into a place of profit by the end of play for the day. They know you're wrong. They want to wipe out all the stops. So they'll bring the market back to a middle range for the day. They know you ended the day up here. They know you're excited to see the profit potential you are going to make the next day. Because you were expecting this. You went to sleep last night with a smile on your face, expecting the market to be all the way up here. What happened instead? We rammed all the stops, even the stops resting low down here. They took them all out. They formed a V bottom right down here. US session opens up. They validate anybody who's going short because most people are greedy. Once they see this move, they're like, oh man, I'm missing the money. I want to get in. They're getting in short now. They've taken all their money. They've trapped the bears down here. They've taken them all out and they've driven the market all the way up. Then you get the US reversal. And that's where you close out for the day. Okay, so we see this, we see this repeated almost all the time. And that's what I want to teach you to capitalize on. Stefan, I re-explained it, you asked me to, and then you disappeared. But let's just do one more. Here, for example, on this pair, you get a Tokyo range. Okay, let's mark out the Tokyo range. Here's the Tokyo range, accumulate. They know the market's going to go down, so they've got to entice the longs. Here are the long traders. They've got them. They've also got stops resting from anybody who was buying from any previous. They got some stops resting. They've driven the market up, enticed the longs. That's what we call a bull trap or a Judas swing. They've enticed the longs, and then what do? Drive the market down. You see that? Happens almost every single day. Some days they'll change the rules to confuse. Don't trade those markets. Trade the ones where you see the rules being met. I'm trying to find any day here to just show you how dark this thing can be. Here again is another Tokyo range. Oops, sorry about the drawing here. Validate the shorts, drive the market down. W formation. That's when you should have been in. Pound session opens up, you're in. Market gives you serious profit for the day. Drops right back down to Tokyo range. Yeah, some days you won't see a Judas swing. Some days you'll just see the market take off. Okay? Now what I want to teach you is how do we capitalize on these moments in the market? We capitalize because what we are, Wealth Mentor, Basilica Invest, which is our fund, we are supply and demand traders. A lot of you have been asking about how do I draw supply and demand zones, how do I do it? We taught this last week. I'm reiterating again this week to make you stronger at it. Okay? So again, I'm going to go through the strategy from the beginning. I hope you got pens and notepads, and I'm going to make it as systematic as possible. Let me delete all my moving averages. I don't want to confuse anyone. Because you don't need moving averages to use this strategy. You actually just need a plain chart. So here we have a daily time, monthly time frame. Always start with the bigger picture. Always start with the bigger picture. Okay. I don't draw support and resistance in the conventional sense of the word. I draw accumulation zones. Basically, an accumulation zone is an area on the chart where price just seemed to not be able to penetrate or break. Some may call it resistance, but it really is just accumulation of orders. For example, if I mark off this area right here, I know I'm looking in the past now, but can you see how the market, the wicks could go above, but the market could not trade higher than this level. But there was a lot of accumulation going on here. This was an accumulation zone. This was a giant yearly order block. Look what the market did. If we made this whole thing an order block, look what the market did. Market makers were accumulating orders in this block. They were enticing some longs. They couldn't quite, they trapped the longs up here. Then look what they did. They drove the market right down. They returned the market to the accumulation zone. Now, anytime you see the market return to the accumulation zone, retail traders call this a retest. It's absolutely not a retest. That is a retail trading term, retest. This is not a retest. This is a return to accumulation. All that's happening is this. If market makers, say again, they had 5K orders to go short, but they only managed to get 4K matching. That means 4K people long. What they will do is they will entice more long holders. That means they didn't manage to get all the orders they wanted. So they entice more long holders, and then they drive the market down again to run their stops. We see here that the market forms a W formation straight into the demand zone here, and then we get a straight rise. Yeah, we almost even return to this same accumulation zone down here. Now, if you didn't understand that, don't worry. You'll begin to see the matrix very soon. But what I want you to notice is these accumulation areas where you can see price just can't seem to break highs or lows. For example, another one was right here. Price was just accumulating here. Ran stops. It drove down beyond the low, but it was a clear accumulation. Then it broke out. Anytime we see accumulation, we soon see breakouts, which is why breakout traders love to, draw triangles and wedges and things like that. But it really is just accumulation. Let's mark this on charts now. Now, this one I've drawn here is not a good one because it's in the past. I want something present. So I draw the current accumulation range, which is right here. See this point where the market is? Now, this may not be a huge amount of accumulation to you, but it is to me. It's 3 months. 3 months where the market could not break this high. Okay? Another accumulation point is right down here. 1, 2, 3, 4, 5, 6, 7. 7 months we couldn't break this low. Okay? That is my current monthly accumulation zone. Now, if you remember last week's lesson, we draw demand zones. Right now, somebody answer me, is the market in supply or is it in demand? Answer that question. And if you don't know, just say you don't know, so I'm not waiting for ages, waiting for answers. But is the market, Sandy says demand, good. Who else? Well, I said good, so I guess you can guess which one it is. Is the market in supply or demand? Stefan says demand. Yep, you're absolutely right. The market's in demand. We look for the last red candle before the market goes up. That is our zone. This red candle here is our zone. Now, the reason why I haven't drawn it is because it's way too big. I mean, if I drew this as my zone, and then I wanted to trade it on a 50-minute chart, look how big that is. That's ridiculous. It's too big. The reason why I don't draw them on the monthly is they're just too big, which is why I just draw the red line instead. The red line, your red line should be around where the supply and demand zones are. So you know, because this is a monthly line, you know the market is likely to, it's accumulating orders right here. It's likely to turn, very likely to turn here. Okay, we know this. Let's drop down to the weekly and see if we can mark off any additional accumulation. Now this one's really good. This is really good because if AUD USD plays out, if it does play out, you'll be looking at 534 pips of profit. There's nothing here really to stop it. You might say, well, there's previous resistance right back here. No, there isn't. This is not, you know, we say, well, this is previous resistance. It isn't. This was a previous zone, demand zone, supply zone, that we were expecting the market to go up and come down from. But what did it do? It said it broke right through it. So this zone is now invalidated. We don't need this. See, that's how old support and resistance traders used to trade. They'll draw levels from way in the past. There's nothing here to hold the market right now. This market has opportunity to rise all the way up. And right now it's in monthly, weekly demand. I'm also loving my indicator down here, which is a Bollinger Band mixed with an RSI. If anyone wants it, I'll send it to you. Just write to me and I'll send you this indicator. It's RSI bands and moving averages. I haven't taught you this stuff yet, which is why I'm hesitant to send you any indicators. But look what the market is already doing. Do you see that? On the daily time frame, we have an engulfing. What do you think is going to happen? Why do you think it engulfed? Because smart money has seen that we are in demand. That is the daily demand zone. So you see, you can trade this on any time frame. I mean, we traded on the 15 minutes because we like being in and out of the market. I don't like holding on to trades for a real long period of time. If I was to set my target for this trade, it will be at this accumulation zone here. You see this level of accumulation? There's supply up here. It's quite a lot of supply up here. So if I was to enter this trade right now, stop losses would be beneath the zone. Entry would be after the close of the engulfing pattern here. If you want to be a long-term buy and hold trader, I mean, even if you lost that trade, you'll be happy with it because that's humongous risk to reward. I mean, on this particular trade, you're looking at 262 pips to a 134 pip potential loss. So over 2-to-1 risk to reward in this particular trade. Yeah. So this would have been a great zone to enter into the market in. Plus what do we have? Are we A, B, C, or D? Where are we in this move? Are we A to B or are we C to D? Talk to me. Are we A to B or C to D? Remember, I'm putting everything together now. Those of you who watched my lesson on A, B, C, D, are we A to B or C to D? Talk to me. Okay, if you don't know, just type I don't know. But it's okay, thank you. We are C to D. Good. Here is A. Here is B. Here is C. Where does our Fibonacci go? Our Fibonacci goes from A to B. There's the AB. We're on 86%. We're seeing a swing at 86%. That's a key level. Now, by the way, if your Fibonacci doesn't have an 86 or 78.6, add these levels in. Most people's Fibonacci's don't have these levels. Just go to the Fibo level parameters, right mouse click on your Fibonacci, and put levels 0.786 and description 786.0. Level 0.86 and 860.0. That's your Fibonacci, okay? Important that you do. Also, I haven't yet done a lesson on this, but also, what do we see here? Clear sign of divergence. Divergence, by the way, is another strong indicator that the market is going to go where we think it's going to go. So that is a clear C to D. Now, C to D projections, if you were really holding this, you should be projecting your D way above here. But I like conservative targets. We are predicting a turnaround. Now, again, if you're like me and you don't like getting in on these time frames, I really don't. But that's a good trade. You'd kind of be crazy not to take this trade, to be honest. Even if it lost, you'd be crazy not to take it. It's a worthwhile trade, high probability trade there. Okay, so if you don't want to take it on that time frame, what can you do instead? Well, again, don't draw your zones on these time frames here. These marking off accumulation. So I'm back on my weekly. I want to see if there's any further accumulation zones. Well, we could say this is accumulation because for 2 days market held above the high. It's not the best look at accumulation, but if we look at the 4 hours, it sort of accumulates a bit better. So this is the current 4-hour accumulation zone. Okay. I want to find, if I'm a short-term trader, I want to find the 1 hour. You can see, if we look at this intraday, what happened, you can see that what the market did from the previous week, validated shorts, what were people doing? They were selling, then it double bottomed today. We had a double bottom. Then what did the market do? It reversed. Okay, so we want to pay attention to all of this. If I didn't want to trade on the higher time frames, I'll be looking to trade these lower ones. So I'm showing you exactly how I analyze, by the way. So I'm looking now at the lower time frames. I found the 4-hour zone, which is down here still. There is also 1 hour accumulation here. You see, market is accumulating above this high. This should set me up for my trade calls tomorrow. Now, what I want to mark off are the 1 hour zones. Again, the higher the time frame, the more secure you are in terms of trading. But I like my 1 hour zones. I want to mark off. Now, by the way, the 1 hour zone was, again, the last red before the market rose. That's the demand zone. I know from higher time frame analysis that this current market is in demand. Here's the demand zone, potentially against tomorrow. So I'm getting a re-entry for tomorrow. I know, or I'm projecting that this market will go up to this high here. All I'm looking for, unfortunately, I missed today's entry. If I had woken up earlier today, here would have been the entry. That would have been the zone from the previous day. Would have waited for the market to dip down. At the close of this engulfing, I would be in. Or actually, I enter my trades on 15 minutes. There would have been today's entry. But can you see tomorrow is likely to accumulate around here? Okay, so we're in strong 1 hour accumulation. Tomorrow is likely to accumulate around here. We're going to your range tomorrow. I like to analyze nice and early in the morning, just before the pound open. We're going to get an accumulation around here tomorrow. Now, if this zone breaks, we're back to our original. Then we get a nice re-entry, but I doubt it will. The market will fall all the way down here. We're going to see some enticement along the way tomorrow. We're probably going to see the market drop down to any one of our 1 hour zones. Could even drop down to this original zone down here before we see it take off. So these are areas I'm interested in. All these zones are areas of interest to me. But again, it's not best to do it. If you're intraday trading, best time to do this, 6 a.m. in the morning, 5 a.m. in the morning. Once the day's kicked off, that you see your Judas swings, you see when the market wants to go off to, then you can enter the market. Let me look at another one. I think we have time for one more or a few more. This is in fact, let's do a 4 hour entry. That would be easier to predict. We're going to do AUD USD 4 hour entry. Okay. Again, mark off my accumulation right there. Right there. Drop down to the weekly. I can see my accumulation zones quite clearly. Now this would have been more obvious on a lower time frame, but to a trained eye you can see that that's accumulation. Dropping down to the daily, and you can see it better. I can adjust it just slightly. Now you say, well, how is this accumulation? Where's the demand zone in this case? Well, it's right here. See this red candle? That's demand right there. That's why the market took off. Now see, I don't need to know that there's demand there. I just need to know there's accumulation there, and trust me, I will find demand. Because all support and resistance is the effect of supply and demand. Okay? Now, I like also to map my market. I can see we're in a clear ABC structure. We're in like a C to D move right now. I always like to map my market to get a good prediction. This is another way of predicting what way market makers want the market to go. Right now, we're hovering above 61%. Okay? We're hovering above 61%. So this would be a trade that it would be better to be in on the buy side than it would the sell side. But if I was looking at a 4 hour entry for tomorrow, let me delete my fib so as not to confuse. If I was looking for a 4 hour entry tomorrow, I want to see how price reacts to accumulation up here, around here. I want to see if price respects this this zone. This 4 hour, and I can mark the whole candle, but it's too big. I can mark just the tip of it. I want to see, again, the higher time frames are more powerful. This is a D1 demand zone. We could get a stop loss. Market could rise to any one of these zones, which is why this is tricky to sell in, because it is a buyer's market. But if I drop down again to the 4 hours, this is what I would be looking for if I were a 4 hour trader, which I'm not. but I did send you some 4-hour signals. This is what I'll be looking for against tomorrow. I'll be looking for some kind of reversal pattern in this area. I'm liking that my my RSI is stuck outside of my Bollinger Band, which is showing me that the market is overbought. We're also in the 68 region. We're in the overbought region. We've run the stops over here. We ran the stops out from this level here. We're now at this high up here. I'm anticipating that this market will come down tomorrow. Does everyone understand? Everyone understands? Yes, yes. Okay. Very quickly, I'm going to pick on a student. Now, Sandy, is Sandy actually your name? Because I'm sure we were introduced as with a different name before. It is Sandy, right? I just want to make sure that I'm calling you by the right name. So Sandy's your nickname. Cool. Are you fine to be called Sandy? Cool, cool. Okay, well, I'll pick on you today. And I'm going to give you, I hope are you using the desktop version of GoToMeeting? Are you on a computer or an iPad? Computer, good. Okay, I'm going to send you something right now. Something should show up on your screen. Tell me if it does. I'm giving you keyboard and mouse control so you can remote access my computer. Tell me if something showed up. Yeah, you have control. Okay, good. Just hold on a second. Okay, let me open up a plain chart for you. Let's go US JAPI template. And by the way, guys, help him and chip in. If consult him and give him advice. He's going to analyze US JAPI for us. We're all going to take his trade tomorrow, so it better be right. I'm joking. I'm joking. Let me get black on white. Okay. Nope, that didn't work. Why did that not work? Black on white. Okay. No grid. Cool. Over to you. So analyze this for us, please. And let me turn on your mic so you can talk us through it. Or you can turn on your mic and talk us through it. Is your mic on? Can you turn it on? We can't hear you. In fact, I'm going to turn all mics on. I'm going to run the risk of doing that. Everybody's mic is capable of turning on, by the way. But if, Sandy, if you particularly turn your mic on so we can hear you. Do you have a microphone on that computer? Okay, so we can't hear you. Don't worry, just go ahead and you have control. Go ahead and analyze. If you press the chart shift at the top, it will move it to the right much quicker. So there's a chart shift right here. If you double click that, it will move. Now, what time frame do you want to start with? Everybody help. What time frame does he want to start with? Monthly, good. So that's MN all the way at the far right. Yeah. Okay. Now, to ensure your chart shift stays on, just click both of them. If you leave both of them on, like that, No matter what time frame you go to, you never have to keep scrolling. And even if you scroll back, say you're on the 15 and you scroll back, it should automatically go back forward. So that's just a little tip. Zoom in, zoom out, and you know, lines if you want to draw them here. Okay, go for it. You might want to zoom in, but double click the line if you want to move it. Might be best to zoom in because it looks like you're drawing support and resistance as opposed to accumulation. You can't see accumulation right now. There we go. Yeah. Yeah. So is that accumulation? Double click the line if you want to adjust it. First double click it. There we go. Now click and hold. Click, hold, and drag. So double click first. Now click and hold. No, don't double click twice. Double click once. Double click. There. Now it's double click. Now hold down on the mouse and drag. There we go. Much better. Well, the top line is much better. Then make sure you undouble click your line. So double click them again so they're not. So if you hit delete, they don't disappear. Make them permanent, basically. Yeah. Good. Okay. Yeah. So you got a range there. No, don't drop down to the weekly. You don't go to 5 minutes. You just go to the next one down. Yeah. Okay. Your original zone wasn't bad. It was just too high up. But it was right. You just needed to get another line. So sorry, let me take over. So here is your original zone. That was fine because that is a zone. That's a supply zone from this candle here. And that's why the market dropped. So it was fine. What you needed was another zone just here because there's some accumulation here, which is why the market's dropped out of the supply that's right here. Your zone here, it's tricky to tell if that's accumulation. We did have a stop hump beneath it. That's hard to tell. There is clearly a demand zone here, though. This candle here forms a demand zone. But we'll see. And if this zone fails, you need the next zone down. Next accumulation is right here. We saw the market accumulated, took off. And yes, there is one lower down, but we really don't need it, but I'll draw it anyway. Down here. Okay. Back to you. No, don't go to 5 minutes. I know you're eager to scalp, but you're dropping. You need to work your way down in order. So you're on the weekly, you should drop down to the daily, D1. Yeah, keep going down. Good. Okay, now you can see that accumulation much clearer. It's better now. You can see it was a stop hunt at the level, which is why the market dropped. Is the market in supply or demand right now? Guys, talk. Is the market in supply or demand? Demand. Good. Okay. Okay. Is there any more accumulation to draw? No, don't leave that line. That line is fine. I would have said. Yeah, double click, and then yeah, there, perfect. That is some good accumulation there. So we're in this sort of small little range here. We had so again, if you're a scalp trader and you drop down now to the 15-minute time frame, what are you looking for? If you drop down now, say you recognize that you're in daily demand, you're right in the thick of daily demand right now, and there's a demand zone right down here, and you can see it, and you realize that you're in that demand, you could drop down to a 1 hour first, find the 1 hour zone, which could be, I mean, for the demand, you're looking for the last, in this case, black candle before the market goes up. And this is this one right here. So we're in this 1 hour demand zone. I can just stretch it out, but we're in this 1 hour demand zone. Market is accumulating around the zone. We're anticipating that the market could buy all the way up, by the way, to here, to your supply zone here. So there's your trade projection. Should this zone hold tomorrow, should it, the market may make some lower moves into the zone, but project the zone into the next day, and this could hold, and then you could be looking at profits tomorrow all the way up to there. Yeah, you can already see the market's made like almost like a W. It's gone in, moved up, gone in. It looks like it's ready to take off any moment. It's just, can you see all these wicks? The wicks are just hanging around down here. This is accumulation. The wicks are just hanging around, and if you're a 15-minute trader, you just keep waiting, or you place some pending orders tomorrow. You just go here and you open up a pending order. If you don't know how to do it, you go to, what on earth, how have I forgotten to do pending orders? I've been trading for how many years and I've forgotten how to do a pending order? Oh boy, there's a problem. Well, my pending orders disappeared. Where did they go? This is weird. This is very strange. I've forgotten how to do pending orders. I think I've fried my brain today. I've been working since morning on different projects. New order, where's that? I'm failing to see new order here, Shane. But it literally should just be at the top. There's always a button for pending orders. I don't get why it's not showing up. When you right mouse click, there should be a button, unless my account, my account is live. This is a live account, so on the yeah, but I always right mouse click. I never go on taskbars. It's always somewhere here. This is strange to me. Let me check my other computer and see if it works on there. My other computer is there. There's like a buy sell stop option. But anyway, we do it this way, and then you set a pending order right there. Then you type in the price that you want the market to drop to before it automatically opens your position. Type in the price for your stop loss as well, and then type in your take profit, and you can have a pending order waiting in the market. But that would be the play I would be looking for USD JPY. Further confirmation. If you want more confirmation, insert indicator, real good indicator to use would be a RSI. Custom settings, you got a 30, sorry, let me not use RSI. Sorry, I didn't mean RSI. Insert indicator, a good one would be a stochastic oscillator. Stochastic simply is another way of knowing whether the market's overbought or oversold. I find stochastics very powerful on D1 and H4. Okay, in this case, the market was clearly oversold. It's clearly oversold. It's looking to make its way back up. Even on the D1 basis, it's looking like it hit the oversold region, looking to go back up. So there's your other indicators that you could be using. Not liking it though on the 15 minutes. So if I'm a 15-minute trader with this stochastic, I may be waiting for a Judas swing tomorrow, stochastic to come back to the overbought, then I might be in. Some people don't like indicators because sometimes they, and you get analysis paralysis because the chart's saying something, the indicator's saying something else, then you end up missing some sweet trades. But some people love them. I personally don't like too many indicators on my screen. But that could be your trade setup against tomorrow. Yeah. And you can see this is how I'm doing it every day. I've marked off my accumulation. I've drawn my supply and demand. I wait for the market to give me its whatever false move it wants to present that day. So you can see from the previous day we were range bound, and now the market dropped. I'm still expecting further drop on Euro USD towards my target. But hey, I mean, if you took in one day 41 pips from the market, you keep taking 50 pips every day for 10, 20 pip stop losses, you'll be sitting on top of some good cash in no time. Any questions before I close? Type N if there's no questions. So again, I'm not waiting. But can you see the potential in this strategy? It's very high probability. I'm talking we win maybe on average about 8 out of 10 of our trades. On a really bad day, 5 out of 10. But on average, we average, once you master this technique, 8 out of 10 of your trades. I've even had 10 out of 10 days where I've analyzed 10 different pairs and all of them went exactly as planned out. But again, it comes with mastering it. It comes with when you lose a trade, finding out why you lost, because there is always a reason. You may have missed something. You may have put your Fibonacci in the wrong place. You may have miscalculated a high time frame C to D move. You may have done your macro analysis wrong. So always checking on how you're analyzing is very important to winning in the trading game. Okay, but I'm liking the look of USJAPI to the long side. I may reanalyze it later and be like, no way, you don't get it long. But right now, I'm definitely liking this as a long trade. It's got demand all the way back from here. All the way back from this big black candle here. It's had a demand zone marked. So here's a really nice, even a 4-hour entry on this particular pair. Got it? Is everybody good? Everybody feeling happy? I hope we get some more analysis going. Guys, the group is too quiet. I'm in other people's trading groups. As you know, they asked me to sit in their trading groups and consult them on trades. And their trading groups are popping off 24/7. I mean, people are constantly analyzing, constantly typing. Even while they're at work on their lunch break, they're whipping out their phones, taking screenshots, sending them. But in my group, it's too quiet. There's nothing going on. Sometimes I even post signals to their group more than I do my own, because it's just more engaging. We need to get more action going in the group. If you want to make a serious career out of trading and you want to make some real profit, please, please, please analyze. Show up to these sessions. Keep on analyzing. Make sure that you're getting your money's worth. I mean, I think we're actually way undercharging for what we're giving people. But we do it on purpose because we think everybody should have this knowledge. But I'm in groups where people have paid thousands of pounds to be part of the group, and because they paid so highly, they make sure they rinse all the education they can out of it. So make sure you are, because your practice is going to be where your money is. If you practice and practice and practice and show us your trade analysis, we will comment on your trade analysis. We'll tell you if we think you're right or you're wrong, and then you can appropriately analyze. A trade one of the students gave, never forget it till this day, really good trade call. One of the students gave was XAU-US, was the gold trade. I mean, this was a trade I took. One of our students saw it. You just set up a simple template on the daily time frame. And this was a simple ABCD swing, nothing else. You see that? That was the C point. There was the trade. Market, I mean, 684 pips. It's still rising. That was a trade that I forgot which student caught that movement, but that was a key trade, 78.6% retracement. There was A to A, B, C. That's connecting A to C. And we can see there was nice divergence on our indicators. Great trade. Phenomenal trade. $10 a pip, that's 70,000 bucks in your pocket there on that move. Yeah. Just remember, in trading, you don't need to win every trade. You just need to stay consistent and don't bend your rules. Okay? But anyway, I hope you all have a good day. My rant's over. Happy trading tomorrow. Please do some analysis. Let me see your thoughts, your trade ideas. Let's see some intraday trades tomorrow. I'll be back to full-time trading. Thanks, Andy. Hope you all have a great day. Bye-bye.